All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin. And first, I want to apologize that I didn't put out a video yesterday. I was literally in the process of making the video, and my computer was having some issues and troubles, and it shut down on me right in the middle of the video. Didn't save the video. I attempted to make it again, had the same issue, so I could not put out a video. This is a new computer, and I'm working some stuff out with it, so just want to apologize for that, but we're going to go ahead and cover the price action today, cover what happened since Thursday night, and we'll just get into it. All right, so Bitcoin here. On Wednesday, we came up into that key high resistance of the golden pocket in our previous range point of control. We were looking for the rejection from that area. Thursday, during the video, we were coming up into that area of resistance during the video, and I did say this could be an area where we reject and see a bigger pullback. Now, we were looking for the bullish backtest of the value area high to see if it would hold us and we could continue higher up to our really key level of resistance between 88 and 88.6. You can see we did come down to the point of control. We did see a nice bullish backtest and a bounce, but when we bounced, we were only able to bounce up to our local golden pocket. If we take that golden pocket, we bounced to our local golden pocket and rejected from the golden pocket. We also took the liquidity of the internal highs. So we had an SFP into the golden pocket, saw the rejection there, and then eventually ended up losing, making lower lows and losing that value area high and breaking back into the volume profile, which is not a good sign. After you see a break of the volume profile, you really want to stay above it to maintain the bullish trend. So because we got the rejection from the golden pocket, first of all, the golden pocket should have been a TP1 area for many people. If you took that bullish backtest of the value area high, that was a nice trade right there. I know it's a scalp trade, but that was a nice trade where you could have taken profit one, moved your stop to break even, and then you would have got stopped out on the rest, but it would still be a winning trade. Okay, so we know why we dumped. We know why we made a lower high and then we dumped back into our value area. So what we were looking for, now that we dumped back into the value area, if any of you guys were live with me on Friday on Jason's Discord, or I covered it in the Discord as well, we were looking for a push back up. Actually, I think on Thursday night we were in this area, or Friday, one of the areas. We were in this area and we were looking for the bearish backtest of the value area high. Now that we have re-entered the value area, we were looking for a bearish backtest of the value area high to see whether we were going to reject and then come down to our actual box of support that we had. Let's see, where was that box? This guy here. This was our box of support we had. And because we had front run that box of support, we had front run the golden pocket, we had front run our point of control, we had front run our anchored VWAP, and we also had a naked daily point of control in this box. I was wanting to see a bit of consolidation here, maybe that move up to the value area high before coming down and actually hitting into our support. That would allow us enough time to see bull divs on the charts between this low and the new low into our support, where we could take a long from this area and look to come back up to the value area high as a TP1 or break it and actually come up to our 88 to 88.6 resistance. Now, we did get that rejection from the value area high, and we did work our way down into our box of support, where primarily we were looking to hit the point of control and the anchored VWAP. It was also a golden pocket down here. If we zoom in on the charts to the 15-minute chart, you can see that we did have bull divs, and I did take a long from there. And I am still in that long. I have taken TP1, and my stop is at break even, so it's a winning trade no matter what. But we were looking lower lows coming in, higher lows on the momentum waves here. We were seeing 15-minute bull divs and under, and we did hit into that support. We saw a nice reaction from that support, took the long. Once we started losing this VWAP here, I TP1'd. And so it's a small winning trade right now because I was just seeing weakness on the charts. Yes, we did start to make, well, right here we didn't even make a higher high, but we did make a higher low. And when we came back on that back test here, I did tell people in the Discord that this could be an area, if you missed longing the lows here, you could have entered in this area where you can see it was our JC pocket. The area between the 786 and the golden pocket is where we came back for that back test. We got that back test here, and we continue to make higher highs. So starting to break market structure very locally on lower time frames bullishly. You know, higher high now, higher low. First of all, higher low, higher high, higher low, higher high. Starting to break bullishly. But in this general area, we were seeing some weakness coming on the charts. We were forming this ascending channel here, and it just was not looking strong. We were not having real volume come in, and we couldn't even make it back up to our value area high. Okay, so what do we look for when we have a deviation of the range and we break back into the range? What we're looking for is if the point of control of that range does not hold, you can expect a rotation down to the value area low. So we bounce from our point of control for now, and it is still holding for now, but we are seeing some weakness here, and you can see now we are just forming a range between our value area high, and I'm not going to say our point of control now, because now I'm going to show you guys something. Our volume levels have shifted a bit with all of this upper price action in the range. We're going to take this volume profile and we're going to extend it to current day, current price action. Look at this. Our point of control has now shifted higher, as well as our value area low. Our value area low used to be below the weekly. Now it is just above the weekly. So we do have a shift in point of control, and you can see we are below our point of control now. We are losing our point of control. If we lose this box of support here that we bounced from on Friday, yesterday, then I do suspect we will eventually rotate all the way back down to the value area low. Now, yes, we might see small bounces along the way. You can see this green box here I have marked out. It is a fresh daily level around 82.7, and then we have the 786 fib pull from these lows here up to these highs here. Our 786 fib pull is at the bottom of this box. Daily 786, and that's a box of confluence that I am looking for a small bounce from. But because we are below the point of control now, we can expect some bearish price action to continue. You can see lower low, lower high, lower low, lower high, lower low, and I'm talking about this guy here. We made a lower low from that guy. Breaking, we have bearish market structure on the hourly time frame. Even here, lower low. Now are we about to form a lower high? Another lower high. So 786 daily, it could be a level where we bounce from, but I am not looking for, if we bounce from this level, I'm just going to be primarily looking for another lower high to come in before we make another lower low and come down to our more major support level at 80.7. Let's go ahead and dive into this a little bit. So first off, we do have some liquidity that is down here, those front runs. We have a few levels that we need to put back on the chart here. So let me go ahead, and that's our previous range point of control where you can see we rejected from. Okay, let's see, 81.6. That is our SFP at 81.6. And then we have, okay, that's our daily there. Where is this guy at? Naked daily, that's at 80.4. Okay. All right, let's see here. I know it's on there somewhere. Let's just zoom out onto the daily, and I will remark that and show you guys. We do have a fresh daily level that is down in this area at 81K. Now we have, let's go back to the hourly chart. They are right below our lows here. So we do have an SFP into the daily, but that's not much of an SFP. That's a very, very small wick. So there's a couple levels where we could see bounces. If we are, now that we deviated this volume profile and we're back inside the volume profile, if we actually confirm a rejection from the point of control, just the laws of the volume profiles is you'll usually move your way and fill that volume profile, work your way back down to the value area low of the volume profile. So anchored VWAP though, this anchored VWAP at around 83.2 is a very, very key support levels now as well. It was acting as resistance on the daily for a while. We were able to break above it, and as long as we can hold above it, we can continue to maybe trade higher overall in this bigger correction. But because we are in the volume profile and on lower time frames like the hourly, we're making bearish market structure. If we start to break this box of support, which now I'm going to hide, we can come down to the daily. We might see a bounce and a lower high in the making before coming down to the daily at 81K, bouncing from that area, and then coming down to our actual real support level around 80.7 to 80.4, where the value area low of our range is. So I'm going to go ahead and turn on a ascending channel that we've been trading in, and let me go ahead and delete this volume profile for a second, because I want to show you guys, almost since our 6K lows, we've been just chopping up and sideways in this ascending channel, low volume corrective structure. And anytime you see an ascending channel with decreasing volume on the charts, our volume overall has been decreasing for the majority of the time during this move to the upside, showing that it is more corrective than impulsive, and that eventually we could see a rotation down to take out our 6 lows. But until we lose until we lose the range that we're trading in, we need to understand that this is going to be the range that we trade for now. We are at the bottom of the ascending channel right now, and we are on the verge of losing it. If we lose this ascending channel and come down to our daily 786 support below us, we could see a bounce there, a move back up to bearishly backtest this channel before eventually flushing down. Now, if we take that volume profile again and we measure this volume profile of this range, you can see the point of control is going to be right around the bearish backtest of this ascending channel after we lose it. So that is confluence for a bearish backtest to reject us to continue down. This level of support here, yes, technically we do have a fresh daily and the 786, but it's not the biggest level. And since we are trading back within the volume profile, if we really confirm that point of control, we have a high probability of rotating down to the value area low, which is in this box of support. Now, I want to talk about this box of support because we've had this marked out for a few days now. It was our fresh weekly level. We've had it marked out for a week now, once the week confirmed last Sunday, 6 days ago. And we have a naked daily point of control at 80.4. Naked daily point of control somewhere here, 80.4. Well, you guys will have to take my word for it. It's somewhere in here. Okay, and let's go ahead and do our Fibonacci pull. From the 76.6 lows up to our highs that we made on Wednesday, we'll look at what we have in that box of support, a golden pocket. So not only is there the golden pocket, there's the weekly level, there's the value area low of our range, there's a naked daily point of control. This is our major support level that does need to hold. If 80.7 to 80.4 does not hold, then I do suspect we will eventually come to take out these lows at 76.6. Yes, we do have some poor lows at 79.9 with some liquidity there that we could come down, see a small bounce from this area. But if we do, I would be looking for a bearish backtest of the value area low to continue to move down. Okay, so golden pockets in this area as well. So right now we're just trading this volume profile. I want to talk about for a second why this here could have been the high and we're not actually going to come up to that 88 to 88.6 area. Actually, first, before we go into that, let's look at our local liquidity. So you can see this is the Model 2 heat map. Actually, we need to go to the Model 2. We need to go to the Model 2 heat map. And let's just go to the last 48 hours. No, we'll stick on 24 hours. What I want to show you is we do have some liquidity just below the lows from yesterday, right around 83K, so below these lows into our daily level, into this support. So we could see the liquidity grab into the daily in the 786 and a bounce. But once again, like I said, I would be expecting it to be a lower high bounce before continuing lower. But our other liquidity locally is above the highs, around 85K, above the highs from the bearish backtest of our value area high. Let's go ahead and go on the 15-minute. And these highs that we saw a couple nights ago when we bearishly rejected the value area high after entering back into the volume profile. I'll actually throw that on the charts real quick so you guys can get a good look at that. So here, let's go back to our 15-minute chart. And you can see here, these highs here were the bearish backtest to that value area high. So now we have some liquidity because obviously some people were shorting the bearish backtest, including myself. I did short that, but I took 100% profit when we touched the point of control. So I'm out of that. but there's some liquidity above these two highs here. All right, it looks like we are seeing a decent bounce from near the bottom of the channel. Now we need to watch if this point of control is going to reject us very, very locally here. As long as we can hold above this level, this was our support level, and we did see the bounce from that support level. Okay, so what we're going to be looking for now, let's zoom back out onto the hourly chart. I just wanted to show you that there was that local liquidity both above the highs from the other night and the lows, these highs, these lows. So for the weekend, because we are in low volume weekend chop price action, you can see that we are forming a micro range between the value area high and what used to be the point of control. Now, you know, the point of control has shifted upwards, but the point of control for the most part of this range was in this area, right in alignment with the anchored VWAP. So we have a mini range for the weekend. So do we, over the weekend, maybe come down, take out these lows, grab the liquidity from there, take out the highs, grab the liquidity from there, and then continue to fill in this volume profile down to the value area low? That's what I'm going to be watching over the weekend coming into next week. I'm going to now go on to my other chart, Binance chart, where I want to talk about some of these bigger pitchfork levels. So let's go ahead and zoom out. Wrong chart. Let's zoom out onto the daily chart here. And I want to talk about this pitchfork here because, first of all, in a few videos ago, I showed you guys why the 76.6 lows were a kind of major low where we could expect a bounce from. Let's go to the 12-hour. Okay, so we did come down. This was our wave 3 of our weekly Elliott impulse, our wave 3 to wave 4 correction pitchfork. Oh, no, excuse me. This one's not the wave 3 to wave 4 pitchfork. This one is the wave 1 to wave 2 corrective pitchfork here of the weekly Elliott impulse. Now, we broke it to the upside. Let's go ahead and zoom in here. We had broken it to the upside, chopped around for a bit, bounced from the back test, bounced from the back test. But then when we lost it and dropped back into the pitchfork, just like with the volume profile, anytime you are above a pitchfork and you drop back into it, you need to watch now for a bearish back test of the top of the pitchfork and a rejection to come lower. Well, you can see on that Trump tweet thing storm, we bounced all the way up to the bearish backtest of that pitchfork level. We rejected hard from that area, created the ABC correction down, and the C wave ended at the 1.236 target, which was also the midline of this pitchfork. Now, since the 76.6 lows, this entire move up over the past few days, over the past few weeks, has looked very, very corrective, very weak volume push to the upside. You can see here on Wednesday when we came up into that golden pocket and previous range, point of control, it was also the bearish backtest of the band of the pitchfork, and we did see a perfect rejection there, and we are dropping back into our lower range value area. So what I want to say now is maybe this correction could be done and we could roll over from here and continue to make new lows below 76.6. And of course, in that case, I'd be looking at the 72 to 70K area is our major support. Yes, we do have some support at 73K, and we have some other support before that as well, 74K-ish, but that's not major support. So then let's go ahead and let's turn off this pitchfork. Let's turn on another pitchfork. Let's see this pitchfork here. You can see this is our wave 3 pitchfork of our weekly Elliott impulse from 2 to 3 to 4 on the weekly Elliott impulse, and 76.6, we bounce 100% perfect from the bottom. We still have not worked our way up to the back test of the band on this pitchfork, and this is why I was saying we could come a little bit higher on this. There is a chance that it's topped out because of that last pitchfork level, but the 90.5, which was the prior lows of this range, you can see here 90.5 was a really good area, and that is in confluence with the bearish backtest of this pitchfork band. Okay, and then, of course, we have this guy. This guy's the bigger pitchfork from the last bull market of, let's zoom out onto the daily. This was from our last entire bull market, from the 65K highs down to our bear market lows in 2021, up to our 69K highs. And you can see we were above the pitchfork. We were trying to hold above it. We back tested it, made new all-time highs, but then when we lost it, we back tested it as resistance and we dropped down to the band. We're starting to bounce from the band. Now I want to talk about this one because this is actually really important. In our wave 4 impulse on the weekly, you can see the band was resistance over and over and over and over and over and over. When we finally were able to break above this band, now that what used to be resistance, now we're testing as support and we are bouncing. So if the first time you break a resistance, usually when you back test it, your first time you will at least get some sort of bounce. We are seeing a bounce, a multi-$1,000 bounce from 76.6 to 86.6, a 10K bounce. To 87, but so 10.5K bounce. But we are still at risk of making another lower high and then rolling down, coming to the bottom of the band, which is around 73.5, 73.6. And then of course our bigger level of support is at that 70K to 72K area. But what I would like to say is look at where the lows of that range are, around 90.5. And it's also the bearish backtest of this pitchfork again, the top of the pitchfork. So we have two levels where the bearish backtest at 90.5 could be an area where this overall correction since 76.6 lows ends at 90.5. Then we roll over and continue down. But the third pitchfork, so I'm going to turn these two off. The third pitchfork kind of tells the story that it could be done now because we did reject from a major level. And I want to talk about this. So you can see in this pitchfork on the daily chart here, this band here on the daily was acting as a support. Yes, we are seeing wicks past it, but no daily candle body closes below the pitchfork band. Well, finally we started breaking that band and closing dailies below it. Now, what used to be support on the daily is now resistance on the daily. But let's go back to that 90.5 level because you can see here the top of the band is at 90.5. So now we have three major pitchfork confluences of resistance at our prior range lows here at 90.5. So there is still a possibility we can continue to grind up over the next week or so in this really low, slow, grindy price action up to 90.5, where we could expect to see a bigger rejection roll over and take our lows at 76.6 into our bigger golden pocket at 70K, 72 to 70K. That's just more macro type price action I wanted to highlight for you, but we are seeing weakness on the charts as what used to be support is now being flipped to resistance. That doesn't mean we can't make our way up to the upper part of the band, but right now our pitchforks are telling the story of breaking back into pitchforks and making new lows, bouncing from supports of pitchforks, but not looking too strong here. Also, of course, it was that fib channel, the midline of the fib channel, the ascending fib channel that is literally guided us through the entire bull market. I showed that in prior videos, so I'm not going to go too much into that, in depth in that. Okay, so let's go back to our Coinbase chart. And I want to just look at one more thing. I know how messy that looks when we're zoomed out. It's also messy now, but we're just going to look at... I'm going to go ahead and hide this channel for now. You can see we're at the bottom of the channel now and we're attempting to bounce. But if we start to break this channel to the downside, we might see some follow through and a dump here. And I'm also going to delete this volume profile and we're going to look at a bigger range here. Because you can see this dump here was very impulsive, a very clear impulse to the downside. One, the Bybit hack caused our wave 1. Wave 2, wave 3, 4, 5. Our 5-wave impulse to the downside. Then after that, we saw the 3-wave correction with the Trump tweet about the reserves. But since the end of this 5-wave correction, you can see that we're kind of just going sideways here. So what can we do? We can look at our range, sideways range, from the lows here all the way to current day price action. And once again, this kind of tells the story. The value area high of this range is at our 88 to 88.6 area of resistance. You can't forget about this area. I know 90.5 is important as well because it's up going to be up here near the midline of this pitchfork. But our value area low of this bigger range is around, what is that, 80.1. So this general area of support between 80.7 and 80.1. But really, I like 80.7 to 80.4, where that naked daily point of control is. But if this area doesn't hold, then I would start to be a lot more concerned that this entire corrective move we've been seeing over the last 2 weeks is over and we're about to dump to make new lows. That is about it now, guys. I mean, as far as price action to the upside goes, I want to highlight something really quickly here. Let's go ahead and hide this. We do have a new daily level at 877, 86.9 pretty much, right up here. Now, you can see that we have this liquidity into our, if we do a golden pocket pull, or a Fibonacci pull, from the highs on Wednesday to the lows from yesterday, and we look at our 786, you can see that our 786 is coming in right above this internal liquidity grab. Let's go in on lower time frames so you can get a better look at this. Our internal liquidity grab before this kind of impulse down here, this flush down, and our daily level. So this is an intermediate level of resistance above us between 86,550 and 86,888. And I would say if we start to break above our value area high, which is around 85K or 84.8, then we could make a move up to this area. We would have to see what happens once we get up here. But I just want to highlight that. Okay, other than that, not much else to go on, guys. I'm going to hide some of this stuff just to clean up the chart. Let me do this. Okay. All right. Money flow. Well, first of all, let's stay on the 15-minute. Look how bearish our money flow looks. Coming out pretty aggressively here. You can see our momentum waves are pretty aggressive to the downside here. But we are still just trading in that mini range between the value area high and the point of control or the anchored VWAP. So I think for the weekend, we could just low volume chop between here. But if we zoom out onto the hourly chart, you can see our money flow topped out near our highs on Wednesday, actually even after, on the bearish backtest of the value area high. Our money flows have topped out and we have been draining quickly, and you can see now our money flow has crossed over into the red and is continuing to drain out here. So not a bullish sign. Let's go to our 4-hour chart. 4-hour chart, you can see that our money flow from our 76.6 lows, money flow, yes, it did drain a little bit more here, but our money flow was coming up, even flipped into the green. But look at where we topped out on money flow on the 4-hour, right at these highs here. Money flow's topping out, and now our money flow is just starting to cross over into the red here, starting to cross over into the red, and our momentum waves are making lower lows here. And this momentum wave looks like it could just be getting started. So we do need to be aware that there is some bullish, bearish signs coming in on the market. I do like, however, that this momentum wave at 76.6 is so deep. And if we do, well, no, we'd have to break those lows to see bull divs. And that is a possibility because we could break these lows into the bottom of the band of the pitchfork down around 75K, 74.9, and see, wait, what am I looking for? If we did something like this, bounce, came down here, had the liquidity grab into the bottom of the pitchfork, lower lows here, and then if this did something like this, higher lows here, we'd be seeing some 4-hour bull dip, which you would want to see 4-hour bull dip at a bigger support level where you expect a bounce. And I would say the pitchfork bottom band of support is a bigger support level. Okay, open interest here. Now, I want to go into this open interest just a bit because we are seeing... No, let's do this. Let me get rid of this for a second. We are seeing some small bullish CVD divs here on our open interest, just very locally. So from our lows that we made yesterday, if we go ahead and throw that vertical line on those lows, let's bring it to 1 pixel here, you can see that our money flow was around this area. So if I put my cursor right on where that money flow was, you can see that we're a little bit below it right now. So we are technically making lower lows in the CVD, even though they don't look the prettiest. We are making lower lows in the CVD. clearly we are making higher lows in our waves right now on our price action. Lower lows here, higher lows there, and our open interest overall is increasing here. So we are seeing some bullish absorption from the lows on yesterday. Now, what could that tell us? That could tell us that maybe we are about to see a move up to take the highs. Actually, I got to zoom in here. Let's go on to the 12-minute. Let me get rid of that line I just created. We have to remember we have that local liquidity sitting above these highs on the bearish backtest of the value area high. Because we are seeing local bullish CVD absorption between this low and the low that we just made, an hour ago, we could make a move up to the top of this mini weakened range, just this mini weakened range here. We could see a move up to the top to grab the liquidity above these highs and then continue to roll right back over and come for the liquidity below these lows. Because on our heat map, you can see that local liquidity on both sides. Market makers, especially in weekends, like to stop out the liquidity on both sides before continuing the overall move. And the overall move since Wednesday has been down. All right. That is about it for Bitcoin, guys. I mean, we're range trading. Range trading, we did reject from the pitchfork band of resistance on our bearish pitchfork. Now remember, this bearish pitchfork is the pitchfork pulled from the all-time high, from the 108K highs down to the first major low to the all-time high. Yes, one more thing I want to talk about here. So, knowing that we are in a weekend and that we do form ranges over the weekend, low volume ranges, if we do continue to chop into a range for a bit, maybe come down to that daily level at 82.7, see a bounce, backtest the point of control, and the bearish backtest of that ascending channel. I know this is probably hard for you guys to follow, but the ascending channel and the point of control are together. If we go like this ascending channel here. And let me go ahead and grab this. We'll delete this for a second. We'll grab that previous range point of control, or no, this range point of control. You can see that the point of control is going to be in pretty close confluence with a bearish backtest of our channel. So if we range for the weekend for a bit, maybe we break this channel down, hit into our daily and our 786, this box right here, hit into this box, and then see a move back up to bearishly backtest the point of control and the channel, and we continue down, you can see that our value, our weekly area could be in very, very close confluence with our pitchfork midline by the time we get down there, which is on Monday, which makes sense to continue ranging for the weekend and work our way down to the value area low. Now, the value area low on Bybit is much higher than the value area low on Coinbase. Let's look at that. Like you can see our value area low on Bybit is around 81.2. But on Coinbase, the same exact range, our value area low is at the weekly. So, and I do like this value area low much better because first of all, it's below this liquidity. So we would actually have a valid SFP of these lows into our major support level. But on Bybit, you can see the value area low is at those lows, and we wouldn't really be grabbing the liquidity if we bounce from the value area low. I like the weekly level in confluence with our bigger golden pocket, in confluence with our naked daily point of control, and our fresh weekly level much better. So I am far more paying attention this time to Coinbase's value area low. Most of the time I pay attention to Coinbase's stuff more. That's it for Bitcoin. Let's go on to Ethereum. All right, guys, Ethereum. Last time I made a video on Ethereum, we were breaking out of this volume profile to the upside. We did come up to the larger 786, which I don't have on my chart anymore, but we came up to that larger 786 fib pull. It was just from these last highs. Let's here down to the lows. And you can see we had rejected almost exactly perfect from the 786 Boom, 786 rejection, but also it was our prior range value area low. You can see our prior range value area low was in confluence. So we were forming a lower range. We tried to break back into our previous range of balance in the market, and we rejected, showing that the market is not ready to reaccept Ethereum's fair value within this range. It wants to continue to evaluate Ethereum's fair value within this range. So what are we looking for? We're in between these two ranges now. What we said on Thursday's video is we want to watch for a drop to bullishly backtest the value area high, very similar to Bitcoin, to see if we can get a bounce and continue up to our next level of resistance. Well, we did see the bounce at first, but just like Bitcoin, it made a lower high, kind of rejecting from the VWAP here, and we broke back down, we made new lows, and we tried to break back into the value area, but we are seeing a bounce. So overall, we are still holding the bullish backtest of our value area high on Ethereum. So Ethereum is actually looking more bullish than Bitcoin as far as breaking its range and staying above the range. Bitcoin is back within its range, and it's actually back below the point of control. Now, we are, yes, locally, we were seeing some downtrends. You can see here, lower low, lower high, lower low, lower high, lower low. But now, higher high, breaking these local highs here. Higher high. Are we about to make a higher low and then continue higher? So, we can look at, let's go here. We can look at our local golden pocket 786 pull from the lows to the highs here. And you can see our 786 is coming in right at the bottom of our ascending channel and right at another back test of the value area high. If Ethereum is going to stay above this volume profile, this range, and continue to the next higher range, this 1951 area needs to really hold. Between 1953 and 1951 needs to hold if we do something like this. And it would also be the bottom of the channel. That's much better. So that's what we would be looking for. Now, if we break back into our volume profile, say we lose the channel and we lose this, we're probably going to flush down to the point of control. Well, where's the point of control? Here at 1904. Guess what else we have at the point of control at 1904? We have a golden pocket pull, and we have a naked daily point of control at 1904. So if we lose the value area high, you can expect a rotation down to the point of control. We can look at that golden pocket here. Golden pocket. No, it's a bigger one. Let's see. Is it this guy here? Nope, this guy. Yeah, this was the lows of the range, excluding that after the impulse finished. So this was clearly an impulse, and then we started ranging. So those are the lows of the range, not the ultimate low, but the lows of the range. And you can see that golden pocket is in that box in alignment with the point of control, in alignment with a naked daily point of control. So I would say this box here between 1915 and 1905 is our next support if we lose 1951 to 1953. If we lose the point of control, then we're probably going to work our way down to the value area low, which we have a liquidity grab at 1860 into our value area low around 1850. So that's all we're looking at, trading the volume profile. We're above the volume profile. As long as we stay above this volume profile and can backtest it and hold it as support, we are going to make our way higher. But if we cannot and we break back into the volume profile, we have a very high likelihood to move to the point of control. If the point of control doesn't hold the support, you have a very high likelihood to rotate down to the value area low. And just like Bitcoin, Ethereum is in this ascending channel that has been acting as a sort of trend, our trend for the entire time. So if we do lose that value area high, we'll be losing our trend as well. Now, you can see above us, we have a fresh daily level at $2,056 or closer to $2,057 there. It is in confluence with the midline of this trend, this ascending channel trend. So if we do continue, now that we've bounced twice from the backtest of our value area high, if we do continue up to this area, we could see a rejection at around 2056. It's also our local 886 fib pull. If we go from the highs to the lows here, we turn on our 886. You can see our 886 is in that area. So that 2056 area could be an area where we do reject. But I would like to give a caveat there. If we do come up to the 886 and reject from the daily, the 886 and the channel midline, we are expecting to eventually come out to take these highs. Because anytime you touch an 886 in a trend, even if you reject from that 886, it highly increases the probability to come take the highs into our box of resistance. Okay, so that is what I'd be looking for if we do come up there. That's pretty much it with Ethereum, guys. Nothing too much here. Nothing else too much. Let's go ahead and go to Solana. Solana here is very interesting as well because we are still just trading in its volume low. We have two volume profiles I'm watching on Solana. So we have our smaller range from March 9th, the same range that Bitcoin and Ethereum have been trading in since March 9th. And you can see we did come up to, oh, actually this happened last night. This is cool because I actually was making this in yesterday's video when my computer broke on me. And I was looking at this as the rejection area. So we did come up into that area and rejected perfectly. But what happened on Solana, yes, this pitchfork band, you can see these two lines here is the pitchfork band, the upper band of the bearish pitchfork. And we rejected to the dollar from the high of the pitchfork here, dropped down, rejected to the dollar from the high of the pitchfork here. We were deviating above our range, our value area high, meaning we might want to break the range to the upside, but then we lost it, came back, bounced around the point of control. We actually came down to our level down here, which was our point of control. So actually I want to show you that because let's take this range here and let's bring it back to right in that area. Now you can see that our point of control was in that range. You know what? It was. Let's do... There we go. Yeah, so we had made this box here before any of this price action happened. We actually made it after, well, we've been watching it for a while, but when I made this box, actually price action was back here. So price action was back here. And you can see that our point of control was at the top of this box. So we were looking for our first major box of support being the point of control, the 786, and our large value area low, which is this white line here. And this value area lows of a range that's been going on for over a year since December of since the March highs, March 2024 highs. So we are at a much more major value area low on Solana, and we are chopping around the bottom of that value area low. But locally, we did break back into our local volume profile. We did bounce from the point of control of that volume profile. And now, since that bounce, this was actually a really good trade. Bounce from the point of control, we worked our way up to our golden pocket and the bearish backtest of the bottom of the band. You can see reject from the top of the band to the dollar, reject from the top of the band to the dollar, lose the band, backtest the value area high, reject from the lower part of the band, come to our point of control, come right back up to our golden pocket and our band. And I mean, like, look how perfect that is. You can't get any more perfect than rejecting like that after bouncing from your point of control. So what I was making in the video, and if you guys don't believe me, I can upload that video, but I don't know if it recorded because my computer shut off while it was still recording. I was looking, we were in this area bouncing from here yesterday, and we were working our way up. We were looking for this area to be, if a lower high is going to come in before continuing down to the value area low, we were looking for this area to be the lower high rejection point at the golden pocket and at the bearish backtest of the band. So we got that. If you longed this here in yesterday's video, I was trying to talk about this before it broke. This would have been a great TP1 area. We've got that TP1 area. So far, now we are making a little bit of corrective price action here. But so far, if you long this area, you should still be in this long with your stop right below that wick. TP1 would have already been taken. Stop loss, actually, you could move to break even now. And then there you go. You're still in that long trade. That was something that I was showing on the charts. Unfortunately, it didn't get to you guys. Now that we are back in our volume profile, so let's take this volume profile, let's extend it all the way to current price action. You can see here we are also kind of bearishly backtesting the value area high and rejecting. Now we're coming back down to that point of control, which is now shifted upwards, just like Bitcoin's. It was down in this box. Now it's shifted upwards, just like Bitcoin's did. And we are trying to come down to backtest it right now. But we are back within our volume profile, within our range. So if we lose this point of control, we have a very high probability to come down to the value area low of the range. Now, I want to give one caveat on that, because this white line here is our much bigger range value area low, where we could see a bounce from that area. Because let's go ahead and do our golden pocket pull from the lows to the highs here. Let's turn on our 786. Okay, 786 is a little bit higher, and that's why it's marked out in this box here. You can see, actually, we already bounced from the 786. So now that we've bounced from the 786, actually, we front run it just barely. But I would say there is, looking at the lower volume profile since March 9th, the general rule of thumb is if you see a deviation of that profile, like this is a very good example of this. You saw a deviation above the volume profile. You broke back into the volume profile to the point of control. Now, the point of control was lower. It was here, remember? So, but you bearishly backtested the value area high. You came down to your point of control. Remember, it was right at the top of this green box. So you can see we came down to the point of control. We bounced up. We kind of retested the value area high again. It rejected us. We rotated back down to the value area low. So this is just volume profile trading. Deviate the range, break back in the range, lose the point of control. You have a high probability to rotate down to the value area low. Well, deviate the range, broke back into the range. Yes, we bounced from the point of control, which you got to remember, it was down in this area at the start of this green box. Came back up, rejected from the value area high. If we start to lose our POC, we have a strong possibility of rotating back down to the value area low. The one caveat I have on that is we do have our much bigger value area low before that. So this could save us from rotating all the way back down to this value area low. But I do like this value area low a lot, because look at this. We have a swing failure pattern into the golden pocket and into the value area low. And the golden pocket I'm talking about is from our lows here at 112K or 111K. If we go from the overall lows of that crash up to our highs and we turn on our golden pocket, you can see our golden pocket is right in that area. And I want to specify something. This move down that we saw, because the golden pocket pulls from this low to this high. So technically we front ran the golden pocket just barely on this low here. So now we have an SFP liquidity grab into actually touching our golden pocket that we front ran, and the value area low is in this range. So this box here between 121.4 and 120.6 is a valid level of support where I absolutely will be looking for longs if we come down to that area. That's about it for Solana, guys. I mean, once again, not too much else going on. Let's actually zoom out onto the daily real quick, and I want to show you that bigger volume profile. So this is that year-long volume profile since the March highs, March of 2024. And let's go ahead and pull that to very, very current day. And you can see the value area low of that range is at the bottom of that green box. And this value area low would be the only reason we can't make it down to this box if we bounce from that. So, but money flow overall on the daily, just like Bitcoin, coming out aggressive, continues dumping to the downside, looks really aggressive here, just does not look good. Okay, let's move on to the next coin. Also, guys, I want to say, if you're getting anything out of these videos, will you please like the video and subscribe to the channel if you feel like you want to get these updates every day. I really do try to make a video every single day, updating you guys on the price action, giving you the key levels, all for free. So if you get anything out of it, please hit the like button. I am trying to grow this channel more so that I can continue to do this and provide value for more and more people. I just want to grow. So thank you guys for your support. Okay, XRP. XRP, last time we talked about XRP, we had this kind of impulse to the upside here. We hit into our value area high and into our anchored VWAP up here, into our box of resistance. You can see it rejected us perfectly. We had this box as a resistance much before we hit into it, since way back here, and rejected into it, rejected from it, and then we were chopping down and sideways in this descending channel. Now, the last time I spoke about this on Thursday, we were right around this point of control, and we were seeing some bull divs into the point of control, and I was saying this might be a nice area to long right now. Well, we didn't actually hold that point of control, and we dropped a little bit lower to the bottom of the channel. Now, I want to talk about that because the bottom of the channel was also the golden pocket of this push up. So what do you see? Especially if you have like a golden pocket support at the bottom of a descending channel on a corrective move, that is absolutely an area where I'd be looking for a bounce, at least up to the midline. Well, what happened? We bounced from the bottom of the channel in our golden pocket up to the midline and up to the point of control. And you can see here, rejected from the midline, rejected from the point of control. So what does this tell us? We rejected from the value area high of the range. We came down. We're losing the point of control of the range. We're bearishly backtesting the point of control of the range here, here, and now even here. Let's go ahead and pull this all the way to current day price, very, very current price action. Okay. And we're losing our value area, our point of control, excuse me. We're losing our point of control. What used to be support now is flipping into resistance. So if we continue to trade underneath this point of control and see weakness, then what do you expect in a volume profile? You expect a rotation down to the value area low. Now, this is a much bigger range. This is the range since that flash crash low. So it's not just from March 9th. This one is really from like February 2nd. So we're looking at a bigger range here. And I would say our next level of support, well, first of all, if we keep chopping down inside, sideways and down in this descending channel, this does overall look like corrective chop after an impulse to the upside. But because it's the weekend and because we're losing our point of control, we can probably expect a move at least down to the bottom of the channel, which would be around like 228 or so. But if we lose that, then we're probably going to come take out the lows from this last big pump here. And those lows, see, this could have been an ABC. Well, that's what's concerning. Look at this here. Clear impulse to the upside in an A wave. You have your 3-wave B correction. Was this a C, just a big impulse in a C? Now your bigger ABC is done, and now you're about to continue down. Now, so far, this does not look impulsive at all. This looks very corrective in here. Low volume, chop to the downside. So we might just see now that we saw an ABC and ABC to the upside, do we see an ABC to the downside into our bigger support area and then blast again? That's something that I'm watching, especially with XRP, because XRP seems a little bit more bullish, and sentiment is really good on XRP. But for now, we're losing the point of control. The next major level of support, I wouldn't even say it's major. I would say the next big level of support, though, is the liquidity grab into a naked daily point of control. We have a naked daily point of control around 220. So you can see we have that liquidity into a naked daily point of control. Also, here's the cool thing. If we keep chopping for the weekend, slow, low volume chop for the weekend, look at what time-wise the bottom of our channel would align with this support level on Monday when markets reopen. So if we continue to just lose and chop down until Monday, hit into our support on Monday, which would also be in confluence with the bottom of our descending channel, do we see that? Do something like that on Monday? That's something I'm watching for. Now, if we lose this box of support, then our real big box of support is this guy down here. It is the value area low of that range. It is a weekly, or it's a golden pocket, and it's the golden pocket of this entire ABC. Golden pockets in here. It is we have a naked daily point of control, and we have our major daily descending channel midline. So this midline here, this dotted midline coming all the way down here, that's our midline of our big daily descending channel. So this box here between 210, I'll say between 210 and 216 is a major support level. Value area low. channel midline, weekly level, naked daily point of control, golden pocket. Like, just major support, major support. So this is an area I'm absolutely looking for a bounce from in this area. If we lose this area. Now, to the upside, like, let's say that we can reclaim this point of control, which you can see also now is aligning about with the top of the channel. So if we chop for a bit here and then we reclaim the point of control, we're probably going to see a breakout of this channel, and we're probably going to see some follow through because we have this liquidity curve that's building here. So anytime you see a super steep channel like this and you break it to the upside, you usually short squeeze it because stops, all of those get triggered, creating a short squeeze, a cascade of liquidation that causes you to push up really high, stop all those people out all at once in one quick, swift move, breaking this channel to the upside, and the target of that break would be these highs here. So, and also in this box here, we did not hit everything. We did hit the anchored VWAP and we did hit the value area high, but there's a daily in this area. There's a naked daily point of control, and we did not swing fail these highs up here around 264. So we do have some stuff up in that area we could be looking for. Let's see. Anyways, you'll just take my word for it's there, or you can go check yourself. We do have those confluences in this box of resistance. And then, of course, the next box of resistance is the value area high of our bigger range into the 786. And the value area high of the bigger range I'm talking about, let's zoom out to the 4-hour chart, is this entire upper price action in the descending channel, in this pink descending channel. So from this high all the way to current day price action, you can see the value area high. Actually, now it's shifted down. It's not up here anymore. So we'll have to change that. And in that case, I don't like this box as much. If it's just a 786, actually, if it's just a 786, I'm going to delete the box. I don't like that. That's not enough confluence for me. Okay, that's it for XRP. Let's now go to Chainlink. Chainlink, same type of stuff, guys. We are in this ascending channel overall from the lows, and we are trading within this range from March 9th. Very, very similar price action happening on a lot of these coins. We're seeing a corrective move from their lows, and this corrective move is mainly in the form of an ascending channel. We broke above the value area high here, but we re-entered back within the value area. You can see we bounced from the point of control, back tested the value area high, rejected it, confirming we want to come lower, make new lows. We did make new lows. Those lows, by the way, are just a local golden pocket from the last touch of the lows of the channel to the high, not golden pocket, 786. So you can see that 786 there, bounced from the 786. And we are just continuing. Now, let's check this out, because you can see we're losing our ascending channel. We lost it to the downside, back tested it once here, rejected on the hourly chart. Back tested it, rejected, back tested it, rejected, back tested it, rejected. Tried to break back within the channel, failed, and we're dropping. Now we are hovering right around the value area high. So if we can start to close like hourly candles or more, I'd say a 4-hour candle above the value area high, we absolutely could work our way up to this bigger purple box of resistance between 15.4 and 15.6. But if we start to lose and start to reject and lose the point of control, then I would say, because to me this looks very three-wave-ish so far. Look at this. This looks like one push down here. This looks like a smaller ascending channel. You can see this little ascending channel that we're in here. And then that looks like an A wave, a B wave, a C wave that could bring us down to our box of support. Do you guys see what I'm saying there? Like, let's just go ahead and zoom in here. And let's just look at this little channel that's forming. So if we go from these lows to these lows here, you can see that little channel. I'll make it blue so you guys can understand the difference. low, low, highs coming to the bottom of it. So yeah, this could be an A wave down, this could be a B wave, and then we could see another C wave to the downside where we come down to this box of support. Now, I have this marked out, not the best. And why did I say that? If you guys remember that video I made on Thursday, because it is the second pivot of the ascending channel, the liquidity of the second pivot, and anytime you break a channel, you at least usually come down to take the liquidity of the second pivot of the channel. And we have an SFP into a daily here, okay? So that has to be marked out because the daily level is fresh and the liquidity grab into a daily is a valid support. But below it is a much better support level. We have the golden pocket from the lows of the channel to the current highs. Our golden pockets in this area, you can see we have a fresh daily right at $13, and we have the value area low of the range. You can see here, that's why the box is marked a little bit below the daily, because it's the value area low of this range. So just like with volume profile trading, if we start to lose the point of control, we can expect a rotation down to the value area low. We would also be losing our ascending channel, and you can expect to come down, grab the liquidity from this low, but also this low here, into our value area low, into our golden pocket, and then see the move up. So this box of support is a much better box of support between 13.11 and really 12.97. That's it for Chainlink, guys. Not too much else happening here either. Just the same type of price action as all the rest of them. Last coin we'll go through is ADA. Okay, ADA is actually pretty interesting because its range is far more sideways than Bitcoin, than Ethereum, than Solana, than XRP. XRP is just looking bullish more than a lot of coins, but look at ADA's range. It's just sideways. Instead of an ascending channel, it's very clearly sideways. And you can see we didn't really break above the value area high. We tried to. We broke above it a little bit, came to the midline, the midline of our bigger descending channel. Let's zoom out for just a minute here so you can see this. Descending channel, midline here. Okay, back tested the midline. Yep, so, and let's zoom in onto the hourly chart. All right, so we are bouncing from the value area low. Seeing, yeah, we're at the value area low, and we're just seeing small bounces from the value area low here. Not much is happening. We're just ranging. So we rejected up near the value area high. We lost the point of control. You rotate down to the value area low. Right now we are chopping around right around the value area low. So as long as this area of support can hold, we could probably make our way back up to this naked daily point of control and the point of control of the range. Let's do our golden pocket pull and let's see. So we're hitting our 786, it looks like, right in the last hour. And we're recovering the value area low. So it maybe we can see a move up to this area here where we have this internal liquidity grab into that area too. But overall, we're just range trading. So we're at the value area low. If this holds, we can expect to move up to the point of control. And if we break the point of control and the naked daily point of control, then the up here at the value area high of the range, you can see we have a fresh daily up here. And we have the value area high, fresh daily. Let me make sure this is pulled. There we go. And the middle of the channel, of our bigger descending channel. To the downside, if we start breaking the 786 here, we have this level here, which I know it looks very minuscule and looks like nothing, but if we click on this and we look at it, it is our bigger 786 from these lows to the highs and our daily. 786 daily, and they're literally right on top of each other. That's why that box is so thin. And then, of course, our big resistance down here at 64 cents. Not resistance, support. All right, guys, that's it. I got to get going here. So I hope you liked the video. If you did like it, if you got anything out of it, please like the video. Please subscribe to the channel, and I'll keep bringing these daily updates. Have a good one.